All right, welcome to another deep dive. This time, we're going to really get into 401ks. You guys sent us a ton of info on this, so we're ready to break it all down.
Definitely a lot to unpack there.
So basically, you'll come away from this hopefully feeling like you really understand this stuff.
Yeah, knowledge is power, right?
Exactly. So you can really make this savings tool, work for you.
Absolutely.
All right, let's get right into it.
Let's do it.
So first things first.
Yep.
How much can you even put into one of these things?
Right.
What are the limits?
Yeah, so for 2023, you can contribute up to $20,500.
Okay.
But if you're 50 or older,
Okay.
there's this catch-up contribution.
Oh, yeah.
It's an extra $6,500 on top of that.
Wow. So like if you're, say, 55
Right.
and you just realized,
Hmm.
like, oh, I could have been adding that extra money every year.
For a decade.
Yeah, for the past decade, that's over 60,000.
Yeah,
Potentially, that could have been working for you.
absolutely. It really adds up.
I had no idea.
It's a powerful tool.
Yeah, it's significant. That's why we're doing this deep dive.
Exactly. The more you know, the better.
Okay, now on to something I always get excited about. Free money.
Who doesn't love free money?
Tell me about employer matching.
Yeah, so that's definitely a perk,
It is.
but it's not always just a straightforward freebie.
Right.
Usually what happens is
Right.
your employer matches a certain percentage of
Yeah.
what you contribute
Yeah,
up to a certain limit.
I see.
So it essentially boosts your savings.
Really cool. But you said there are some strings attached.
Right, yeah, it's not always as simple as it sounds.
Okay, so what are the catches with employer matching?
So first off, not every employer even offers it.
Makes sense.
And then there's something called a vesting schedule.
Oh, yeah, vesting.
Which basically determines when those matching funds actually become yours.
I see.
So it's important to know
Okay,
what your company's specific policy is on that.
good point. Okay, now I feel like a lot of people listening have probably heard about,
Yeah,
traditional versus Roth 401ks.
right. Yeah.
Which one's better?
That's the million-dollar question.
Yeah.
And unfortunately, there's no one-size-fits-all answer. It really
Right.
depends on a few different things.
Like what?
Well, your current income, your projected income,
Okay,
and how comfortable you are with risk.
makes sense.
But a good pro tip here
Yeah.
is to consider a blend of both.
Oh, interesting.
So mix and match.
Exactly, yeah.
Yeah.
So, I put all this money into the 401k.
Mhm.
What happens to it? Is it just
Yes.
sitting there?
So you actually have a say
Okay.
in how that money is invested.
Oh, okay.
401k plans usually offer a range of choices.
Oh, cool. Like what kind of choices?
So you've got things like mutual funds,
Okay.
which are basically baskets of stocks or bonds that are professionally managed.
Okay.
You also have target date funds,
That.
which adjusts as you get closer to retirement.
Nice.
So those can be good for, hands-off investors.
Right.
And then there are index funds,
Okay.
which track specific market indexes
Yeah.
and aim to basically mirror market performance.
Interesting.
And then sometimes even company stock is an option.
So many choices.
Yeah, there's a lot to consider.
How do you know which one to go with?
Well, that's where this idea of diversification comes in,
Okay, diversification.
which basically means not putting all your eggs in one basket.
Like a balanced diet
Exactly.
for your investments.
Exactly. You want to
Right.
spread your investments across different asset classes.
So stocks, bonds, that kind of thing.
Exactly. Stocks, bonds, cash.
Oh.
It's all about managing risk
Mm-hmm.
and maximizing potential returns.
That makes sense.
Yeah.
So how do you decide how much goes where?
Right. So that's called asset allocation.
Okay, asset allocation.
And it's all about balancing risk and reward based on two things: your time horizon,
Okay.
which is how long until you retire,
Mm-hmm.
and your risk tolerance, which is how comfortable you are with market ups and downs.
Yeah, got it.
So somebody younger, further away from retirement,
Right,
might be more inclined towards stocks,
makes sense.
which historically have higher returns but also more volatility.
Okay, yeah.
Whereas someone closer to retirement might
Yeah.
favor a more conservative approach with bonds.
Right.
Yeah.
So you kind of have to keep an eye on it. It's not...
Yeah, you want to rebalance
Okay.
your portfolio periodically.
Okay, read.
Balancing, because as different asset classes perform differently,
Gotcha.
your initial allocation can drift.
I see.
So rebalancing helps you stay on track.
Okay, this is all great, but I feel like we need a little reality check. Nothing in life is truly free, right?
That's true.
What about fees?
Right. So there are fees involved with 401k plans, like
yeah.
administrative fees, which cover the cost of running the plan,
Makes sense.
and investment management fees,
Right.
which are charged by the fund managers.
So even those small fees, over time,
Yeah,
they can really add up.
absolutely. They can really eat into your returns.
It's so important to
Yeah, it's crucial.
be aware of them.
Exactly.
Okay, so let's fast forward way down the line.
Okay.
Retirement.
All right.
When can you actually get your hands on this money?
So the general rule is
Okay.
age 59 and a half.
Okay.
That's when you can
I mean-
start taking penalty-free withdrawals.
Penalty free. So
Yeah.
what if you need it sooner?
So if you withdraw before 59 and a half,
Yeah.
you'll generally face a 10% early withdrawal penalty
Wow.
on top of your regular income taxes.
Ouch.
So it's really meant for the long haul.
Got it. Okay.
Yeah.
Now, remember we were talking about that free money from employer matching.
Yes.
Are there any catches there?
Right. That's a good point. So we need to talk about vesting schedules.
Vesting. Okay.
So vesting basically determines how much of your employer's contributions
Okay.
you actually own
Got it.
if you leave the company before being fully vested.
I see.
So some companies have immediate vesting,
Okay.
meaning it's all yours right away. But others might have a graded vesting schedule
Right.
where you gradually earn ownership over time. So
Interesting.
you might have to work there for a certain number of years.
To get all of it.
Exactly. To be fully vested.
This is a lot.
It is. There's a lot to digest.
It's complex.
Definitely.
This is why, like,
Yeah,
sometimes people get overwhelmed with this stuff.
absolutely. And that's where seeking professional advice can be a game changer.
Okay, so talking to a financial advisor.
Exactly.
Okay, we'll dig more into that in the next part.
We'll definitely get into that.
But first,
Okay.
we need to tackle a topic
All right.
I think a lot of people listening can relate to.
Yeah.
Debt.
Oh, debt.
Stay tuned.
Yeah, we'll be right back after the break.
Okay, so before we jump into debt, I wanted to go back to something you mentioned earlier,
Yeah.
rebalancing.
Right.
What are some signs that it's time to kind of like
Oh, that's a good question.
reassess your portfolio?
Yeah, so rebalancing isn't about like constantly
It's a-
tinkering with your investments, you know?
Right.
It's more like checking in with them periodically
Okay.
and making sure they're still aligned with your goals and your risk tolerance.
That makes sense.
Yeah, because, you know, life throws curveballs.
Yeah,
Your goals might change over time,
absolutely.
and the market definitely doesn't stand still.
Right. So how often should someone be doing this?
Right.
Is it like once a year? Every few years?
So there's no hard and fast rule.
Okay.
Some people prefer a set schedule,
Okay.
like annually or semi-annually, while others kind of do it based on
Yeah,
market fluctuations or like major life events.
makes sense.
So it's more about finding a rhythm that works for you
Right.
and just kind of sticking to it.
Okay, let's talk debt.
Right.
Not the most fun topic, I know.
Not always the most exciting conversation.
But I think a lot of people listening
Yeah.
can relate to the feeling of,
Mhm.
having some debt looming over their head.
Yeah, it's a common challenge for sure.
Absolutely.
It can definitely impact your
Yeah.
overall financial strategy,
Right.
including your 401k.
So how does debt play into 401k
Wow.
investing?
Right. So
Should you be like laser focused on paying it down before even thinking about retirement?
So it really depends on the type of debt you have
Okay.
and the interest rates,
Got it.
like high interest debt,
Okay.
like credit card debt. That can be a real wealth killer.
Yeah.
You know, those high rates can just negate any potential returns you
Yeah.
might be earning in your 401k.
It's like trying to fill a leaky bucket, right?
Exactly. It's a great
You
analogy.
got to plug those leaks first
Yeah, you got to stop the bleeding.
before you start pouring more water in. So prioritize the high interest debt,
Yeah.
then focus on maxing out your 401k.
That's a solid approach for a lot of people.
Okay.
But you don't want to completely neglect your 401k, even if you have debt.
Right.
Even small contributions
Okay.
can make a difference over time
Right.
thanks to compound growth.
Got it. So
Yeah.
it's really about finding that balance
Exactly.
for your own situation.
Your individual circumstances.
This is where a financial advisor
Mhm.
could really come in handy.
Absolutely.
Right.
They can help you
Help you figure out that balance.
create a holistic plan that takes into account
Right.
all aspects of your financial life.
No.
Debt management, retirement savings, any other goals you might have.
I'm convinced.
All right.
I want to find a financial advisor.
Okay.
Help me navigate this. What
Right.
should I be looking for?
So first
Yeah.
and foremost,
Yeah.
you want to find someone you trust,
Okay.
someone you feel comfortable with. This is a long-term relationship.
Mhm.
You need to be able to communicate openly and honestly about your financial situation,
Okay.
goals, concerns, all that.
So it's not just about finding the person with like the fanciest credential.
Credentials are important,
Yeah.
but they're not the only factor.
Okay.
Look for someone who is experienced
Okay.
in working with people in similar situations as you.
Makes sense.
Whether that's young professionals, families, people nearing retirement.
Right.
Also, check if they're a fiduciary,
Oh, fiduciary. Okay.
which basically means they're legally obligated to put your interests first.
That's good.
Yeah,
So no shady sales pitches,
exactly.
hidden fees.
Right. A fiduciary advisor will be transparent about their fees
Okay.
and provide clear explanations of their recommendations.
Good.
Don't be afraid to ask questions
Right.
about their experience, their approach, how they get compensated.
Right.
It's your money. It's your future. You have the right to be informed and make an educated decision.
Okay. I'm ready. I'm ready to interview some financial advisors.
Great.
Before we wrap up, is there anything else like
Uh,
people should be thinking about when it comes to their 401k?
So one thing that often gets overlooked
Right.
is estate planning.
Oh, yeah.
Not the most pleasant topic
Girl.
to think about, but it's really crucial to consider.
Right.
What happens to your 401k assets
Right.
after you're gone?
I just kind of assumed it would go to my spouse.
Right, that's a common assumption.
Okay.
But it's not always the case.
Really?
Without proper estate planning,
Yeah.
your 401k assets could be subject to probate,
Probate.
which can be a lengthy and costly process.
It's no good.
Not for your loved ones, no.
So how can you avoid that?
So the key is to designate beneficiaries
Okay.
for your 401k account.
Okay. Beneficiaries.
You can name your spouse, your children,
Mhm.
other family members, or even a trust.
So you can specify exactly who gets it.
Exactly. And you can update your beneficiaries at any time.
Oh, okay. That's good.
So it's important to review those designations periodically,
Okay.
especially after major life events.
Yeah. Makes sense.
Like marriage, divorce, the birth of a child.
Good reminder. We tend to just
Right.
set things and forget about them.
Exactly.
But life is constantly changing.
Always changing.
Estate planning
Yeah,
added to the to-do list.
definitely.
Well, this has been a fantastic
Yeah.
deep dive into 401ks.
Yeah.
We've covered so much
A lot of ground.
from like the basics to the more
Yeah.
complex stuff,
Yeah, we've really gone deep.
like estate planning.
Definitely. It's been a pleasure sharing this journey with you.
Me too.
Hopefully you feel equipped to take control of your 401k now
I definitely do.
and invest in your future with confidence.
Absolutely. And remember, everyone,
Yeah,
it's never too early
never too early.
or too late to start
Or too...
taking control of your retirement planning.
Right. Take charge of your future.
We hope you'll join us again next time
Yes.
for another deep dive
Absolutely.
into a topic that matters to you.
We'll see you then.
Welcome back to the deep dive. So, we've been talking all about 401ks,
Yeah.
and I have to say, I'm feeling a lot more confident about my own retirement planning now.
That's great to hear.
But before we wrap up,
Okay.
I wanted to kind of circle back to something you mentioned earlier,
Yeah.
those target date funds.
Right, right.
Can you tell me a little bit more about how those actually work?
Yeah, so they're designed to simplify investing, especially for people who prefer like a hands-off approach.
Okay.
Basically, you choose a fund with a target date
Mm-hmm.
that aligns with your estimated retirement year.
Got it.
And then the fund managers
Okay.
handle the asset allocation,
Okay.
and they gradually shift from a more aggressive mix of stocks
Okay.
to a more conservative mix of bonds
I see.
as you get closer to that target date.
Yeah. So it's like they're on autopilot,
Exactly.
kind of adjusting as you go.
Yeah. The idea is to take the guesswork out of
Okay.
asset allocation and rebalancing.
That makes a lot of sense.
Yeah, it can be a convenient option
Okay.
for people who don't want to actively manage their investments.
Right.
Or maybe they just don't feel comfortable making those decisions themselves.
Makes sense.
Yeah.
Are there any downsides, though?
Well, one potential drawback is
Okay.
they might not be personalized enough
Sure.
for everyone's unique situation. Like,
Yeah.
for example, your risk tolerance or your specific financial goals
Mm-hmm.
might not perfectly align
Okay.
with the fund's predetermined glide path.
So it's still important to do your research.
Absolutely.
Make sure it aligns with your overall strategy.
It's not a one-size-fits-all solution, yeah.
Got it.
You always want to understand what you're investing in,
Oh.
how it fits into the bigger picture.
So we talked a lot about professional advice,
Yeah.
but what about those online tools?
Right. Robo-advisors, are those a good option?
They can be.
Okay.
They've become really popular lately,
Yeah, I've heard of those.
especially for younger investors or
Right.
people who are just starting out.
Okay.
They use algorithms to create and manage portfolios
Oh, interesting.
based on your risk tolerance and goals.
So it's like having a digital financial advisor.
Yeah, in a sense.
Okay.
They can be a great way to get started with investing,
Mm-hmm.
automate your savings,
Yeah,
take advantage of technology
makes sense.
to simplify the process.
But it's still important to choose
Right.
a reputable one.
Absolutely, yeah. And to understand
Okay.
the level of personalization,
Mhm.
human interaction they offer,
Right.
some platforms actually provide access to human advisors
Oh, okay.
if you have more complex questions
Got it.
or need more guidance.
So really, it's about finding the right fit
It
for your
is.
needs and your comfort level.
Exactly.
All right. Well, this deep dive has been incredibly insightful. It has been fun.
I feel like I've learned so much about 401ks.
Yeah, me too.
From like the little details to the bigger picture stuff.
It's been a journey.
It has.
It's been a pleasure sharing it with you.
Likewise.
Remember, knowledge is power.
Mm-hmm.
The more you understand about your 401k,
Yeah.
the better equipped you'll be
Right.
to make those informed decisions
The
that
middle.
align with your goals.
Absolutely. And it's never too early
Never too early.
or too late to start
Too late.
taking control of your retirement planning.
Couldn't agree more.
So whether you're just starting out in your career
Uh-huh.
or nearing retirement,
Yep.
there are steps you can take
Absolutely.
to secure your financial future.
You got this.
Don't let those 401k statements just pile up.
Open them up.
Read them.
Take action.
Even small contributions, right?
Even small contributions can make a big difference over time.
Because of the magic of compound growth.
That's right.
And don't be afraid to ask for help.
Yeah, there's no shame in asking for help.
Whether it's from a financial advisor,
Right.
a trusted friend, family member,
Yep.
online resources, there's a lot out there.
Tons of resources.
We're all in this together.
We are.
And the more we learn and share knowledge,
Absolutely.
the brighter our financial future.
Couldn't have said it better myself.
All right. Thanks for joining us on the deep dive.
It's been a pleasure.
We hope you feel empowered
Yeah, take control.
to take control of your 401k.
Invest in your future.
Invest in your future with confidence.
Yes.
Until next time, keep diving deep.
Keep learning.